What is going on, everybody? It's been a couple weeks since I last uploaded a video, and there's been a lot of things happening lately. This video would be too long if we covered all of it, so I'm going to cover three things today on this video. So before we get into it, I ask one thing is to like the video. I'm not asking you to buy anything, just simply like the video. I hope to be able to do content creation full time, so it helps push these videos out whenever you get it a like. All right, so three things that we're going to talk about is one being Lyft. A lot going on with Lyft. It's been on a crazy run lately. Number two is just going to be touch up on the economy, kind of where we stand. The Federal Reserve cut interest rates by 25 basis points. And then that's going to tie into the last part and kind of just touch up on valuations, specifically IonQ. Kind of just want to talk about that and how the valuations are just getting a little too insane right now with a lot of things in the market. So we're going to touch up on those things in this video. So Lyft and Waymo, this was the big news that recently came out about Lyft partnering with Waymo, and they're going to offer autonomous vehicles onto Lyft's platform eventually. So this was the big thing. Now, before this even came out, Lyft has been on a crazy run. So if you've been following me online on X, I posted about Lyft earlier this year in 2025. I think right now, year to date, it's up 67% year to date. So it's performing very well relative to the S&P. And, and I spoke about this, all the way in the 13s. That's like my average cost is like $13 and like 80 cents or something like that. So really, I'm up really nice on my spot position, and I'll tell you, what I plan on doing with those. But right now, just the gist of this partnership is they're gonna offer the Waymo vehicles in Nashville in 2026 on Lyft platform. So just the thing here is that what they're gonna do is they're gonna offer these on the Waymo app first, and then they're eventually gonna put the Waymo vehicles on Lyft's network for anybody that's interested in using the autonomous vehicles. So that's going to be really, really cool to see, and it's obviously really big news. Now, I've always kind of said this about this whole autonomous vehicle coming to the markets and being a threat to Lyft and Uber's businesses. So, people think, the robo-taxi Waymo is just going to take over and just completely dominate the ride hailing industry. And yeah, that, long term, maybe we're talking like 5 to 10 years out, maybe, but it's not an immediate threat to their business right now because there's still a lot of regulatory approvals that Tesla and Waymo have to do before this becomes like mass scale throughout the entire country, right? So that's one thing. Number two is I don't think a lot of people, understand, Lyft and Uber, they have all of these people on their platform already. If they're going to offer autonomous vehicles on their platform, why would somebody just say, oh, hey, I'm just going to go create an account on Waymo or Tesla's app just so I could just ride, right? Because they have to put all their information, create an account with them, put in their credit card information, connect their bank account, whatever it is. It's not as easy as it sounds, and like people aren't going to do that if they're just going to offer it on their platform that they're using anyway. So that's kind of my like outlook on that. I don't think it's an immediate threat in the short term. And you could see, right, they're partnering with Waymo right now, and it's going to be really good for Lyft. Just where we're at right now, um, the past 3 years has been sideways trading for quite some time, and we kind of broke out of this high at like $20.62, which is really nice to see. So what I'm doing with my position is I did covered calls on my shares, so I don't really want to get rid of Lyft right now. I think this can get to $30, the ultimate stock price, but my covered calls right now, just so I can collect a decent premium. I did $25 covered calls just to collect some money on that. If they get called away, I'm perfectly fine at getting rid of them at $25. So, and if they don't get called away, then I keep the shares, and then I just sit on the premium and keep that. So that's what's going on with Lyft. The second thing, spoke about this in some previous videos that I posted, was the Federal Reserve, the new rate cut cycle incoming. And I've showed you CME Group. I've always checked CME Group and for a while now, and whenever, I'd say like 2 weeks before the next Fed meeting, this is usually like, I've never seen it be off. So if it's a 90+% chance that there's going to be a cut, it's always spot on. So we looked at this a few months back, might have been a month ago, and we saw that the September meeting, there was like a 98% chance that they were going to cut, in which they did. We're still favored to have another cut in October, and then we're favored to have another cut in December. A bunch of bankers, analysts, they are saying that they expect the Federal Reserve to cut 2 more times as well. So the funny thing with that is that right now we have gold and the S&P that's making all-time highs, and that's only happened 4 times in history. And the first year was 1980, and then 2020, 2024, and then 2025, which again, this is that 4th year this year. So typically when people invest in gold, it's due to uncertainty, right? They're uncertain about what's ahead in the economy. They're afraid that it may go down, so they don't really want to be too risk on, meaning that they don't want to go into equities, right? Because there's just a lot of risk in the economy that could, be, I don't know, collapse or something like that, right? That's typically why people flock to gold. So the way that I look at it, and what the question comes down to is, and this is, the Federal Reserve is cutting, meanwhile gold's hitting all-time highs. So this just comes down to the question is, who's right? Is it going to be the commodity/gold investors, or is it going to be the equity investors? The equity investors right now are pricing in rate cuts, right? And what happens when you cut rates is that money becomes cheaper, right? So if you want to borrow money on, let's just say you have a Robinhood account and you want to borrow money, which is called margin, to buy more shares, then it's going to become cheaper. So they charge interest on that. So let's just say they charge 4.5% interest on the money that you're taking out, right? Interest rates get lowered. Now they're going to charge you 4% or 3.75% interest, and it makes a big difference for the big money that's in the market, right? People that are taking 100,000, 500,000, whatever it is. So that's typically why interest rates, or why it's interesting and why people get bullish in the economy, because, and specifically the stock market, right? Because then you have businesses that are able to refinance some debt and basically keep more profits. So it's going to be interesting, and only time will tell on what this economy is going to do and who's essentially going to be right in the near term or short term. But it's definitely interesting to see. So this goes into the last part of this this video. All right, IonQ. IonQ. This is a quantum computing stock, if you're not aware. Quantum computing has been, I wouldn't say it's been like a theme of 2025, but it's definitely been thrown into the mix of just like it's a hot topic. And a lot of these stocks have went on some crazy runs. So just looking year to date, actually, I think 2024, yeah, the end of 24 is when it had the pretty crazy run, and then it fell back down, and now it's kind of just been trending since March. This company is worth $21 billion right now. Now, let's go to their financials. All right, so trailing 12 months, they have about $52 million in revenue. Let's just look at the prior year. 43 million is where they finished in 2024 for revenue. Let's go to their net income. So they lost, let's forget trailing 12 right now. Just for 2024, they lost $331 million. And then free cash flow, they're actually burning about over $100 million. Profit margin is negative 885%. So you have a company that fundamentally looking at their financials, I mean, this is like horrific. This is one of the worst income statements I've probably ever seen. Um, yeah, and look, there may be some things in here. I'm just looking at just top high level view of just free cash flow, net income, and just revenue. But for a company to be worth this much, and $21 billion, they don't even have revenue of $55 million, and net income is, I mean, there's no trajectory here of any turnaround. It just, it does not make sense. And on top of that, in the previous 10K, so right here, put this in there in the 10K, we expect to continue to incur significant losses for the foreseeable future. Again, they have no expectation of having any profit soon. So for a company to be worth that much, it is absolutely ridiculous. Oklo is another one. This is a nuclear stock, talking about like nuclear energy, stuff like that. This is worth 19 billion. Same concept. Where's the revenue? I don't know why this isn't even showing the revenue, but either way, net income, right? They're losing money, 73 million last year, and then you look at their free cash flow. Again, just it just does not make sense. Some of these valuations are just getting too crazy for me, which is why I started taking profits on a lot of things, because I just think we're getting to bubble like territory. And I know on the flip side, you could say the Fed, they cut interest rates, money's becoming cheaper. Now, I'm just not buying it. I don't want to get caught holding the bag, as they say. So obviously, you always want to have some type of money and some type of exposure to the stock market. That doesn't mean I sold all my stocks and I'm just sitting on the sidelines waiting for a crash. I don't play that game. I don't try to time the market, but I do like to take my profits. And when I see things like this, looking back at 2021, you saw a lot of companies that were trading at ridiculous valuations, similar to how this is. I just take that knowledge from what I learned in the past and I try to apply it right and right now. These valuations, you can't talk to anybody and they cannot tell you that this is a realistic valuation. And we could even go to Opendoor. Opendoor has been the hot retail stock right now. They're sitting at $7 billion valuation. This one, I wouldn't say this one is as bad as as IonQ and Oklo, but still, like, just looking at the financials of this company to be worth that much, it just doesn't make sense. So there's just a lot of euphoria in the market. I've seen a lot of people posting screenshots of a lot of their gains online, their portfolio hitting all-time highs. So that's just another kind of indicator right there that just has me a little bit worried. But that's really all I wanted to cover in this video. So, let me know in the comments if you're buying more stocks, if you're bullish on the near term or even long term, or let me know if you're selling stocks. But I appreciate you for watching this video, and I'll see you in the next one.